Let's take a look at some information and charts on Bancor for Brave New Coin. Bancor is an AMM DEX, so ultimately you need to know number of users, total volume, and then some general AMM metrics. Do they have a token? Of course they do, because why not, right? So I'll look at the token information, as much of that as I can find. And pretty much all of the AMM's swap platforms look identical these days from a UI perspective. There's no individuality per se. Maybe Sushi is a little more heavy in the flair, but from a usability perspective, very simple. Interoperability perspective, very simple. Everybody's connected to everybody. And the aggregation side of things. The BNT pools are a little bit different. They're not 50-50. They're sort of variable, and you can see the variations listed here. And the liquidity, for the most part, on any of these platforms. The stablecoin pools have the biggest liquidity along with ETH and BTC. And for some reason, I'm not really sure, but Link is also up there for BNT. DAI listed here as well. Could be an incentive thing, an impermanent loss thing. I'm not really sure. They do attempt to mitigate impermanent loss. Last video I was talking about minting and burning and IL mitigation. And a commenter corrected me, so thank you for that. I do read all the comments. He says they offer impermanent loss protection, and the rewards are given based on incentives and pools, which makes sense. I think Bancor was one of the first AMMs, one of the original. Might be wrong on that, but they were very early compared to all the other stuff that's come around. And they also aren't burning BNT, but they are burning VBNT, which is a 1-to-1 to BNT after you stake it. So there's some complexity here that I don't really fully understand, but you can always read more about that. There's a post on April 4th where they talk about what they're doing. And ultimately they say that this burning mechanic is an important part to their flexible monetary policy. Anytime you introduce minting and burning, you're tiptoeing into security territory. So it'll be interesting whether or not this stuff gets hammered by the SEC eventually. That's not just Bancor BNT, that's every single DEX AMM maker, DAO especially. I think BNT actually kicked off US users back in the day, a long time ago. Not so much anymore, but when their platform was more decentralized. Could be wrong on that. So VBNT is burned every swap. Great, let's look at that. Let's look at those numbers. It says it puts a deflationary pressure on the circulating supply of BNT. And if we look at the burning mechanic, really what I want to see is total amount burned versus price. That's really all anybody cares about. Does it have an impact at all in the near term? Is there some correlation? Doesn't really appear to be the case. Some subtle correlations, but anything since January that's done well, you can't really take seriously because everything's done well. So it's not like the introduction of the burning mechanic is really what's turned around the coin. It's just more of a rising tide raises all boats situation. So the question is, if volumes decline over time, the burning mechanic is going to decline over time. How will that affect things in general? Will it even matter, right? Are there too many dexes? Will the dexes converge into a singular large dex, that sort of thing? I don't know if this is enough to move the curve for BNT, the token, or the exchange. If we look at the stats on DeBank, TVL has kind of declined along with everything else in DeFi land. And if you're an exchange, volumes are probably the most important thing, especially if you're on chain, because it's harder to fake this volume. Not saying that Bancor ever has or will, but in general, crypto exchanges are infamous for that. And Bancor's volume has dropped off considerably since mid-May. Transactions still quite high though, as well as users still quite high. So it looks like there's still plenty of users relative to where those numbers were over time previously. Still not large in the relative grand scheme of things, but it looks like the people who are there haven't really left. And my guess is the incentives for BNT are part of that. I haven't used BNT myself, so I don't really know the ins and outs of all that stuff, but that's what it looks like when I see volumes drop off a cliff. And if we look at volumes compared to everybody else, here's Uniswap. This is on the past 24 hours. Uniswap's probably going to continue to eat everybody else, including the aggregators. The fewer individual dexes, the less need for aggregators. And that just is a perpetual cycle that's going to make Uni bigger and bigger and bigger. For the most part, all these other ones that exist are just here in case Uniswap fails, basically. I mean, at the end of the day, when you're pulling the volumes that you're pulling on Uni, and you're going layer 2, you're basically pro ETH, ETH maxi, you're not really going multi-chain, you're probably going to eat everybody else. All these other dexes going multi-chain is another like soft acknowledgement that Uni is the de facto leader here on the ETH side of things. They have to outcompete in some way, shape, or form. So there's Paraswap, there's 0x, there's 1inch, all those are aggregators. And then Bancor is down there in the orange slice, very small over the past 24 hours. And if we look at over the past few days, Bancor still, I mean, you wouldn't miss it if it was gone. You know, it doesn't really move too much of the volume on a day-to-day basis. And on a monthly basis, volumes in the turquoise here are certainly increasing, which is good to see. Definitely increasing since April, so maybe, you know, that has moved the needle on the burning side of things. But in general, not too much going on. And you can just see the crazy spike here in volume on the 18th. Well, it was due to the 18th decline in prices, but in May in general, DEX volumes hit over 140 billion for the month. Unlikely to reach that level anytime super soon. Again, that's just like max euphoria, max fear, max panic. We're probably going to cruise around this $50 billion level for an extended period of time until something else changes. Something else we can look at is the revenue per year. That's either based on volume, which in case Uni's volume revenue is 100% based on volume. And Bancor, because that burning mechanic has a little bit of that protocol revenue. MakerDAO is pure protocol revenue. So that's a pure burning mechanic. So we can look at this and say, Uni's the biggest DEX, obviously. Even if supply declines significantly, they'll probably continue to hold a large amount of supply side revenue versus Bancor. So you got to look at these all relative, where you see these DEXs going. Because if I'm looking at this, you know, I'm buying stuff that's over here on the left side of the curve and sort of waiting and ignoring stuff on the right side of the curve. I'm more concerned with pure supply side stuff like SNX that's on this side of the curve, because if that just drops off completely, stuff like Balancer, then all of the revenue is gone, right? So it depends on where you're coming from, what you think the narrative is going to be in a bear market. Here's TVL versus annualized revenue. We can look at market caps versus annualized revenue. I think we're still sort of trying to figure out what metrics even matter. What is a PE ratio equivalent? Does that even exist in DeFi land? But again, Bancor's sort of in the middle of the pack here. This would be things that would be more bullish, but it's hard to really look at all this stuff collectively and say these numbers even matter. Curve is purely stablecoins basically, so it's going to have a lot of TVL. It's kind of like a savings account, whereas these pure swap platforms, lending and borrowing platforms are slightly different. So it depends on what you want to look at. I think the closest to the PE ratios is probably market cap to annualized revenue, and Bancor's at the higher end of that relative to everything else. Again, Uni is pure supply side, Maker is pure protocol revenue. So tons of caveats, tons of variables and variability here. But if you're bullish on something, you probably want to see it on the left side of the curve, or on the left side of this graph, rather than the right side. Moving on to technicals, this is the 1 year MA multiplier. The green is the 365 MA, so historically it's been below the 365 for most of its life, arguably 2 years below that MA. In 2020 it finally popped up, so it hit the highs, got smacked down, hit the lows, got bought up. A nice inverted shoulders here. Hit those highs again, got smacked down, now it's back in the lows. So if this bounces here again, then I can say with a reasonable degree of certainty that this is believable. If it happens once, it's a fluke. If it happens twice, then we start to see a trend. Then you can start to say, all right, there's some bias as far as buy zone, sell zone potential here. If you're buying down here, you're really hoping we're not in a 2-year bear market for BNT USD. There's also probably a pitchfork here with a point here and 2 more anchors here, giving you this kind of link Aave type pitchfork, which will again tell you buy zone, sell zone up here. So if you're buying at 3, this indicator is telling you to sell at 15, 16, 17. Looking at the 5200 yearly pivots, VPVR, RSI, and volume on Bittrex here, I think they have the most data for BNT USD. There's a death cross here with a bull div, so a bit of a competition between bearish continuation versus mean reversion, bullish reversal. the most part, everything has an Adam and Eve W double bottom, ready for mean reversion to the 200-day moving average. So Bancor is not alone in that regard. If all of these coins can either hold their previous high or hold the January open, then it's easier to be optimistic on bounce potential. So you can see there's a ton of volume historically around the $2 zone. So like Zcash, if we can stay above this psychological support, I like bullish reversal-y type things happening. Otherwise, we're going to be ranging between 0.6 and 2. Really depends on the market as a whole. BNT isn't just going to move on its own. Previously, when it death crossed, it ended up completing that bullish reversal. But the moral of the story here is that it's not going to move without you. This isn't going to just moon before the bull cross happens, typically. The death cross was also at the bottom here, which is kind of always the case for crypto on the daily because it moves so quickly. Things just dump in a couple days and the MAs don't have a chance to catch up. So if I'm bullish on this, I'm either trading the range to 455 or I'm just buying all of the lows based on, this MA multiplier, just continuing to buy all the way down to 0.6. And then below that, I'm just saying, what have I done with my life? Because at that point, it looks like it's ready for all-time lows. But that's part of catching knives and dollar cost averaging. Here's the cloud, which also has a TKC clamp, TK disequilibrium, telling you probably doesn't go lower before mean reversion. You can see glimpses of that previously, what that looks like, how that plays out, a potential bounce point. Now here is the TKC clamp. First you recapture the Tenkan, and then you make an attempt to tap the Kijun in the red line. Doesn't always happen, and the more this can stay flat before the mean reversion, the higher the confidence that this actually is able to retrace to that level. So the first step is to make this bull div, basically, and then the next step is to be sure the bottom is in, which is when you're going to see these TK lines flatten out. The Kijun's already flat, but the Tenkan flattening indicates a lack of continued momentum, and then you'd see a move to 550. So to short this or sell it here looks a bit late, and the mean reversion play looks better. BNT-BTC also has a death cross, also below the yearly pivot. This, historically looks quite awful. It's put in this Adam and Eve in 2018, and then just had this 2-year bear market. Had a 1-year bull div between the oil chart and this and Zcash, and there's really good examples of how long these bull divs can last. People just think the bottom's not in on alts, and it just continues to go lower, goes all the way down to sub 2,500 sats, right? And then finally did something. So ideally, you're buying in the bull div zone, and you're selling whenever you're comfortable on the highs, right? Currently looks like the top end is at 15k sats. So similar to Doge, if I'm just buying a range low and selling a range high, I'm just sitting this out until it's back below 5k sats again. And trend metrics are on your side for bullish continuation here. There's no nothing. It had its W here, broke out, tried to go again, failed. So this looks like it's probably headed for more pain, potentially just slow bleed forever, like it was from 2018 to 2020. But again, this doesn't move without you. It's not going to just magically reverse. On this daily chart, it has a history of multi-month consolidations before doing anything. So I think it's fine to just wait it out. BNT ETH, though, has this multi-month bull div that it's working on with RSI sitting sub 30, briefly sub 20, just mega oversold relative to ETH. Again, if you're just looking at this as a range, this is your low, this is your high. The closer that it gets to the low, the range low, the more attractive it's going to become to people just looking to buy the dip on anything. And again, you can see in 2019 how long this bull div lasted before it did anything. So these bleeds are usually agonizing and excruciating, but when they do play out, this is a heavy multiple to the upside. So Bancor is a small fish in a big pond relative to the other AMMs and DEXs. It's got both supply side and protocol revenue attached to it. It's got a minting, burning mechanic-ish. It's got IL protection based on the incentives offered. Kind of sits in the middle of the pack relative to the other DEXs in the metrics department. And technicals on the USD pair look ready for mean reversion, whereas technicals on the BTC and ETH pairs look certainly more bearish, where the ETH pair looks decently approaching capitulative buy type lows. Lastly, I'll just mention the ETH-BTC fund and DeFi portfolio I trade for Techemy Capital on Enzyme.finance, non-custodial portfolio management tools, where you can send USDC or ETH into the smart contract, allowing me to copy trade those funds essentially. And everything's transparent. You can see AUM's allocation performance. You can see trades. Bought some last night, BTC and ETH. You can see all the deposits going in and out. It's not a Roach Motel, nothing like that. You can see previously we held Bancor in the DeFi portfolio. Last night I bought Aave, Link, and Uni because those were the better looking charts, but I'm not too geeked or psyched to get into this market in a big way until stuff is more clearly bullish. That's all I have for this one. Like, dislike, comment, share, subscribe, and happy trading.